Russia oil trade with China and India stalls as sanctions drive up costs. Trade for March loading Russian oil in top buyer Asia has stalled as a wide price gap between buyers and sellers emerged in China after costs for chartering tankers unaffected by US sanctions jumped, according to traders and shipping data. Washington imposed a fresh sanctions on January 10, targeting Russia's oil supply chain, causing tanker freight rates to soar as some buyers and ports in China and India steered clear of sanctioned ships. Offers for March Russian ESPO blend crude exported from the Pacific port of Kozmino jumped to premiums of $3 to $5 a barrel to ICE Brent on a delivered ex-ship basis to China after freight rates for an Aframax tanker on the route surged by several million dollars. Three traders familiar with the grade said. Prior to the January sanctions, a robust winter demand and firming prices for rival grades from Iran spent spot premiums for ESPO blend crude to China rising to close to $2 per a barrel, the highest since the start of the Ukraine war in 2022, the aftermath of which had sent discounts to as deep as $6. In India, Bharat Petroleum Corporation Limited's finance chief told Reuters last week that it has not received any new offers for March delivery, as it would ordinarily have, and expects the number of cargoes offered for March to drop from January and December. India typically receives offers for Russian crude during the middle of each month. Russian crude accounted for 36% of India's and nearly a fifth of China's 2024 imports. The latest sanctions target tankers that carry about 42% of Russia's seaborne oil exports, primarily to China, according to analytics from Kepler. Although sanctioned tankers are gradually discharging oil in China and India during a waiver period. The US clarified to India that tankers loaded with Russian oil must discharge by February 27 under the sanctions. India's Oil Secretary Pankaj Jain told reporters on Friday. Payments for oil on board affected ships must be cleared by March 12, he added. Port delays. In China, newly sanctioned tankers face delays offloading oil despite meeting waiver requirements. Three of them discharged Russian ESPO and so-called crude during January 15 to 17, while tanker Oila offloaded at Shandong's Yantai port on Sunday after carrying its ESPO cargo for nearly 3 weeks, according to LSEG data. Tanker Huihai Pacifica is still waiting to discharge at Tianjin after loading its ESPO cargo on January 5th, while Victor Tito is heading to Qingdao after loading so-called on January 6th. LSEG data showed. In India, 9 newly sanctioned tankers have discharged oil since January 10, with several carrying Urals crude on the way, LSEG data showed. US sanctions and a ban imposed early this month by China's Shandong port group will see refineries in Shandong province losing up to 1 million barrels per day of crude supply in the near term, consultancy FGE said. Independent refiners are cutting runs as alternative supply is more costly, it said, expecting 4 lakh BPD run cuts by February. Kepler senior analyst Su Muyu expects China's imports of Russian Far East crude to remain low in coming weeks after falling to a 6-month low of 7,17,000 BPD last week. For India, FGE said the country faces disruptions in 4,50,000 BPD of Russian crude supply, but refiners are taking advantage of the wind down period. India has been experiencing lower Russian supply over December and January compared to preceding 6 months. Indian refiners have sought alternative supply from the Middle East, Africa, and the US for March and April as they expect Russian supply to tighten, Reuters has reported. Thank you for listening. Thank you for watching. Thank you, everyone. Bye.